A down day in the markets again today. Kevin Duling with KD Investors joining us. And Kevin, we saw grains all lower on the day, new contract lows in wheat once again. And a lot of this had to do with more funds selling and risk aversion from outside markets, didn't it?
It did. The macros are in charge today. You've got three banks that are seeing large losses on their stocks, and the stocks are down 400 to 500 most of the day, and crude oil's down $4. I mean, pretty much red across the screen. And the grains are they just fundamentally, I would suggest things are much brighter than the market appears. It's just that when we got index money moving out, and you got hedge fund pressuring as well, you're just not going to have a good day. So corn, I thought, held up well. Wheat and corn both tried to get to positive about mid-session, but just the weight of the day kept coming at it, and it we ended up lower in both of those.
Do you think the funds are just going to continue to push these markets lower, or are they going to stop selling here fairly soon? What would get them to stop?
Well, I would hope just looking at the May-July inverse would make them stop selling, but it doesn't seem to matter yet. And so with the calendar in May now, we've only got 45 days until we're into the weather season. So I would think they wouldn't want to press the short side too much longer. With that said, I mean, if they can make a market move, they're going to, and you've seen it in wheat, and that's why it gets so out of balance. But with corn, it's a much harder market for them to push. But technically, we need to see it hold here. I'd like to see the July start gaining and start headed to where the May went off. May's going to go off the board, and to me, that's fundamentally will be right in the long run. But short term, we could see some more pain here, I think.
Yeah. How much of today's action as well was weather? We continue to see wheat kind of pressed because of the rains that have already fallen and more in the forecast, especially for like areas of Kansas. And then you have a little bit more favorable window here going forward for planting and development.
Right. You just got to question how much, acreage shifting is going to happen. I think rain at this point for a good chunk of that crop, with 30% of it is just going to end up, the producers are going to make the decision whether to tear it out and go with milo, or are they going to go with soybeans, or depending on their location, or are they going to, ride it out with the wheat. And that's a big chunk of that crop. And the other 30% is probably already been abandoned. So, rain at this time is not really bearish wheat. It's going to help that 30-40% that's there, help the quality, help the kernels develop in the head. But man, so much of that crop's already, it's just too late. It's May. I mean, we're already got combines rolling in Texas. So, it started. So you look at these big moves lower, and I don't know. I don't think the KC market needs to buy demand down here. A lot of that, if it gets down here, the feeders in the Southern Plains are going to grab that, and it's going to be off the world market pretty quickly.
And the wheat market has not done the corn market any favors, obviously, but wheat, new contract lows again in all three exchanges. How much lower do you think we have to go in that market?
Man, you wouldn't think with the amount of feed. We just sold a couple feed cargoes of soft red this week. It sounds like there's a lot of feed action going on in the Pacific Northwest, is all with that soft crop. So you would think we're more than low enough. Our cash prices did not break today or yesterday or last week. We've gained 38 cents in our basis strength the last 3 to 4 days here in the Northwest. So that tells me that the cash market does not need to drop. Futures are really kind of on their own. You've got such a mismatch in open interest and positioning there that it's hard to put a whole lot of faith in those markets right now. The Kansas City market does not need to buy demand, and that's what it's doing. That just doesn't add up. That crop's going to be really small that time at the end of the day. So watch the cash markets on the side of that hard red, because they'll, that basis is really going to tell a story if the market continues as it is.
Doesn't feel like the futures market cares how small the HRW crop is, or if we get anything planted up in the spring wheat areas, though, Kevin.
I know, but it's got to at some point, I mean, unless USDA is just way off, and I mean way off, not just by the little, nudges here and there I typically do, or we typically do. I mean, they've got to be just completely off the rocker if those crops don't matter. Because when I'm looking at it, I mean, we're going to have, usage above production again for the fourth year in a row in the world wheat market. So every bushel is going to count in this thing. And to think that these crops don't matter is just crazy to me. So like I say, unless we're using numbers that are just completely foreign to what we're used to looking at, but I don't think that's the case.
So the soybean market is held up better technically than corn and wheat. We've held above 14 on July beans, above that 12.50 mark on November. But will we be able to continue to hold on to those levels, do you think?
I'd be surprised, especially, especially given like the planting pace of wheat in the northern plains. That to me suggests we're apt to see some more acreage move over to soybeans. And you look at the market structure, there's still quite a few. It's got a much friendlier as far as who's long, who's not. I mean, that looks like to me there can be some more liquidation there, whereas wheat's getting stretched, corn's kind of neutral. Soybeans still have a lot of longs that could get kicked out of there, and so I can't call the bottom in that one yet. I still think we could have some work to do. So
okay, yeah, and crush demand though has been good. I think that's held up maybe the old crop contracts, but new crop, obviously Brazilian pressure has been pretty hefty, hasn't it?
Yes, it has, and that's it's going to be. We're going to get into capacity issues at some point. I don't know how much they can ship with Argentina pretty much out of service. I don't know if Brazil can meet all those needs. So maybe we don't end up canceling some of those later Chinese cargoes. Maybe we can ship those, and we'll see. And at the end of the day, we still got to have a good crop coming forward, because we're going to have basically no carry out of anything. So that's the exciting part of the grains right now. Is it's just managing that market structure and trying to get see how many more longs have to come out of this thing before we can confidently say it doesn't belong any cheaper than this. So
absolutely. And let's wrap up with cattle. We did have a down day today, and some of that was a function of some lower cash trade. I think 172 in the south, so that'd be a buck lower than last week. But obviously, there's got to be some risk aversion in that market today too.
Yeah, I feel like we're at a pressure point here in the consumer. I don't think as a whole the population has a lot of money right now. If you the family of four, my family last weekend, we went out to, I think we picked up a quick Subway sandwich on the road, and it was $65 for four of us. And I just don't feel that the consumer can handle the really higher beef prices. And so this is, to me, the first price point. I don't think we're done necessarily. We may back off for a bit, but I mean, we're not ready to free fall, in my opinion. But this is the first level that feels like we could be here for a while and back off, $5 or $10, and then make another stab at it again. But the cattle complex is great fundamentally, but at the end of the day, consumers have to be able to afford it. And I feel like everybody's pinched right now.
All right. Thanks for joining us. Kevin Duling with KD Investors. That is Markets Now.